Hey Anonymai, welcome to a more of a discussion video than we normally have. I wanted to dive in to a topic that I've been wanting to talk about this topic for a long time, but it takes a little bit of preparation and a little bit of forethought. And what I've done here is put together some data. Now, I am not a licensed broker. I don't have the ability to buy anything from you or sell anything from you. I'm not here. I'm not here to tell you what to do. But in my mind, I always poo-pooed the idea that coin collecting and precious metals were not the best investment. So what I really set out to do here on this video was prove that precious metals were not the best investment. I am a coin collecting guy. I love coin collecting. I have fun with it. I have made money at it. Some things more than other things I've made money at. And so the thing is, I always preach that this is a hobby. I would not use metals or coin collecting to invest long term, to make a profit, for any kind of financial security, for retirement, for saving up for a home, for saving up for college. This is all, I've always preached that this is not the best vehicle to do that. I didn't really have the numbers in front of me, so I didn't beat it too much. I didn't beat the dead horse too much. But what I've done here is put together 4 different sections, and you may be able to read them by now. This section right here is the S&P 500. It's often considered the most baseline. It's the most standardized index for United States stocks. So you can buy a big group of stocks with one index purchase of the S&P 500. It's the 500 large cap stocks. In the next section here, I have silver bullion, not silver collecting coins. In this next section here, I have gold bullion. And then in the final section here, I very arbitrarily had to pick something to track the prices over time. What I chose is the 1881S Morgan dollar in MS63. It is a higher grade collector coin that most people can afford. I didn't want to choose something super high end where there's a top pop and one guy can afford it. That I don't think that that's a fair measure for the discussion that we're having here. So I chose the 81S and MS63. The farthest data back that I could find for all 4 of these put together was either 1968 or 1969. I can't remember. What I ended up doing with my data is starting at 1970 and just going by decade. So what we're looking at here is, maybe I'll zoom, maybe that'll be easier. Had you had $1,000 in any of these given years, or in 1960, 68, or 69, I can't remember. It's not really that important. If you had $1,000 in the late 60s and you bought $1,000 worth of the S&P 500 at 92.15, give or take, if you still had the same number of shares, you would have had a 5,104% return. Okay, I've got this coded in green. My little legend down here is that for any given year product comparison, the darker green is the best performer, the lighter green is a good performer, the orange is an underperformer, and the red is the worst performer. So the next column here, the silver, if you had bought $1,000 worth of silver bullion back in 68, it would have gone up 1,180%. That is the worst performer long term compared to all 4 of these. The gold bullion, being the second best performer, had you bought $1,000 worth of gold somewhere around 37 bucks, it would have been, it would have gone up in value over that time period 4,277%. If you had bought these 81S's at about $5 a piece, you bought $1,000 worth of them. They're now each worth, and I think this is inflated, I don't think this is totally right. They said about 200 bucks. I think it's really a lot less than that. I think it's more like 80 or 90 bucks. But let's give them the benefit of the doubt and stretch it to 200. I'm using PCGS tracking numbers here. Let's say 3,900%. So, best performer, S&P 500. Second best, gold. Third best, coin collecting. I think even if it was at 90 bucks, it still would be higher than the worst performer, silver, at about almost 1,200%. So if you really think about it, that took 53 years to get these returns. We're talking about a lifetime of investing. So I know these numbers can seem mind-blowing, but you have to park the $1,000 for 53 years to make this happen. So this would have turned in to, quick math, add 3 zeros, divide by 100, 50,000 bucks. So what I wanted to do is point out, long term, you're better off in the stock market. Putting it in a large, lunky index fund that doesn't have a lot of risk. Your second best bet is gold. Your third best bet is collecting coins. Fourth best bet was silver. Now, other hypothetical scenarios, and I won't drain you through each one of these, but in depth at least. If you had spent $1,000 in 1980, the S&P would still be your best bet. Second best bet, gold. Third best bet, silver. Fourth best bet, coin collecting. There was a huge price bubble in the 80s that you're seeing on the numbers here that would have crushed the return. The only way that this had much of a return at all long term was because back in the 60s, even with inflation, they weren't that expensive. If you had done the same thing, spent $1,000 in 1990, the S&P 500 stock index still would have been the best performer by almost 3 times. Next best is silver. Third best is gold. Fourth best, collecting coins. Now, had you put $1,000 into these products in 2000, the best performer would have actually been gold. It deflated quite a lot in the 90s, and it settled in at a pretty low price around the year 2000, around $279 an ounce. So if you had done that, you'd had a pretty good return. Second best in that stretch, silver followed the same trajectory. It got very cheap, and then after the 08-09 bubble, it kind of went up and stayed up. So you had a better return on silver. In that stretch of time, the S&P actually was third on a 20-year window. That was the weakest window of time for the S&P 500. Had a lot to do with September 11th and the dot-com bubble, and also the crash of 08-09. So it had a few weak periods, which lowered it in this medium-term time window. And then last place, coin collecting. Here in the bottom column, we'll say you have about a 10-year window. Had you put $1,000 into all of these products in 2010, the S&P 500 is pulling away with it, really, at 280% return in a 10-year window. Second best would be collecting coins. Third best is gold. And fourth best is silver. Now, I've gone through all these, and I use the colors because I visually think that they help the brain see the trends. So you can see among the best performers, the S&P takes the cake. Unless there's some kind of strange little window that you're looking through for a short period of time, or medium period of time even, you're really, long term, you're better off putting $400 a month into some kind of retirement vehicle, into an S&P index fund. Gold, long term, gold, this is the one that surprised me. I thought that this would come in lower. Gold has the best non-equity track record by quite a lot. You have to look at charts and kind of decide whether or not you think it's overvalued or undervalued right now, if there's any room to grow. But long term, this has really a startlingly good track record. Coin collecting, guys, this bubbles like nobody's business. What I would suggest with the coin collecting is buy what you like. If we're talking about very specific things, I realize that there are coins that have gone way up in value, way beyond the numbers that I am showing you. But there have also been coins that have gone way down in value, way worse than the coin that I'm showing you. I had kind of had to arbitrarily pick something that everybody can invest in, like an 81S. And that's what I came up with. Criticize that all you want. I had to pick something. But it's hard to argue metal-wise with the gold. It's if you really want to have something tangible, which is typically the argument for the metals, the gold, I'm not going to tell you what to do. The gold has the best track record. Silver has the worst track record by quite a lot. However, here's an interesting fact. Gold is worth about $1,800 an ounce right now, and it's worth about and silver is worth about $23 an ounce right now. You can do the math on that ratio. I forgot to do that ahead of time. It's about 70 to 1 if I had to guess. Did you know that for every ounce of gold they pull out of the ground mining, they only pull out about 7 ounces of silver? There's something about that ratio, the gold to silver price, that just doesn't feel right to me. And I'm not an expert in the metals market, but I think if there's room to grow anywhere, I think silver has the most room to grow. I'm not predicting a big price bounce. In fact, if it went to $50, I'd kind of be surprised. I think there would be a lot of people lining up to sell their silver. There's a little bit of a glut of the market. You can go to your coin dealer and they've got big buckets of junk silver. So do what you want with this information. I will continue as a hobbyist to buy silver, and if I get the opportunity, maybe continue to buy a few different gold type coins. But personally, what I do for my retirement, I'm in index funds, 401k, pour money into it. It has an incredibly good track record. It tracks with inflation. The traders all build inflation into their projections and their buying. It is also an asset that has value regardless of what monetary policy is. Really recommend taking these long-term risks. Not buying and selling. I'm not talking about day trading, but putting money in every single paycheck for a long period of time. And these returns are impossible to argue with. And if you go farther back 100 years, it looks just the same. So that's my dissertation, guys. I wanted to show you some of these results that I saw when I was putting these charts together. I was not surprised that stocks outperformed. Bonds are turds. I do not recommend any kind of bonds. But these stocks performed the way I thought they would. The gold surprised me. The gold genuinely surprised me with its growth trajectory. Silver actually kind of startled me with how poor it did. I thought it would be a little better than it did. And the coins, the graded coins, they were as rocky and bumpy as I thought they would be. I didn't know what I would expect, but it did prove to be just as rocky and bumpy as I thought. So, take this information, do what you want with it. I think coin collecting is a hobby. I think it's an amazingly fun hobby. I think it's a hobby you can make money at if you make good buys. You can make easy sells, continue to flip things, take that profit and go buy other things you'd rather have. I have a lot of fun doing that. Do I think I'm going to strike it rich on coin collecting? Probably not. That's not why I do it. If you enjoy it, do it because you love it. But if you're investing, diversify. Do all kinds of things in your portfolio. If you want a little bit of metal, do it. But it might be for more of a crap hits the fan scenario, or really you're just praying for a bubble. And most people in a bubble, are you even going to go ahead, are you really going to part with it? You put all that emotional energy and hope into the metal. Is there really going to come a day when it hits a price where you're willing to part with it? Or at that point, are you just going to hold on to it harder? Those are questions you have to ask yourself. So you have to think like a business person if you want to talk like a business person and talk about making money. But if it's a hobby, do it because you love it. So I hope this video was helpful, guys. I hope I didn't muddy the waters too much. I wanted to present information more than tell you what to do. So I hope you guys have a great day. Happy hunting out there. Enjoying the coin collecting hobby. I sure do. Give me a thumbs up. Leave a comment. Tell me if you've got all these in your portfolio, one of them, somewhere in between. We'll see you guys in the next video.